Hey everyone, today we're going to talk to Carson Jones. So we kind of connected through LinkedIn, talked, and we had several things in common. He's a business owner turned to real estate investor to author. I think he's writing the second book. I forgot to ask about that. I think he's writing the second book now. It might be about business actually. But let's get into his history. I only gave brief because he ran a couple of businesses, or he was in two different type of businesses before we went full on to what he's doing now, real estate, and helping people passively invest, or at least, show them how to invest passively. But with that being said, Carson, could you kind of give the intro, your history,
Yeah,
what you
absolutely.
do now?
I appreciate you. The book I wrote is the Red Flag Playbook. It's a tactical guide for real estate investors, and it's really meant so people can ask the right questions. I'm the second book you were referring to. I'm looking at writing another book for small businesses, buying and selling them.
Hmm.
And red flags to look for. I've sold a business before. I've done a lot of stuff in the I've acquired them, I've gone through franchise, all that. But anyway, a little bit about me, I grew up in the Dallas Fort Worth area. That's where you're from down there. It's a booming area. Went to Baylor down in Waco. Been an entrepreneur for almost 20 years now. It's hard to believe. Um, so anyway, I'm just like you said, been a business owner, real estate guy. I'm a real estate broker too. If people are looking to source deals out of the state of Tennessee, I'm here for you. Commercial real estate. So anyway, I'm an investor as well. So
Awesome. Let's get into your business background, right? Just before the call, I was trying to verify. So you had a marketing business and then into the restaurant business. We kind of talked about a little bit of how you got into restaurant business, but let's talk about the marketing, right? How long did you have it and what made you shift essentially into the restaurant business, kind of for the audience?
Well, yeah, I still actually have the marketing business. It's
Ah.
it's been my longest running business. I do marketing for, investment companies. It's more of the bigger brokerage type companies.
Hmm.
Think of in terms of like Zacks or investments, the bigger shops. I do a lot of marketing stuff for them. So anyway, I also do smaller shops as well, but I put together marketing for smaller stuff too. So
Gotcha.
it's still going on. It's been going on for a long time. So I got into the restaurant business with my dad. It was a learning experience. And a lot of that I go through in my book is, a lot of people look to escape corporate America,
Mhm.
and sometimes they look in the wrong places, and my restaurant was profitable. One of them that I sold is actually still open today. So, it wasn't a money decision to get rid of it. It was actually probably smarter to keep it, based on the cash flow.
Mhm.
So most people go into the restaurant business and just fail, and so they're out like right away, and they're like, okay, screw this, I'm going back to corporate America. But I went in and I was pretty successful, not, great, but the employees, just the whole grind of the whole thing wore me out. So that was my inspiration to get into more passive income opportunities, as well as a lot of the things in my book talk about, the first two chapters talk about that transition from corporate America, the red flags.
Mhm.
People that spend a lot of time on LinkedIn, everything's easy on LinkedIn. Owning a business, they make it look so easy. Raising $10 million is easy too, because you only see the end result on LinkedIn. So,
Mhm.
a lot of my book talks about that being a red flag for you going into business and what do you want to invest with and
Mhm.
finding the right match for you. For some people, they want to run a restaurant and it's a match for them. I'm not saying it's not it's for somebody out there, just not me. So anyway.
Gotcha. Well,
Um,
let's get quick couple of quick questions before we dive into the real estate and even the whole point you made about the social media projections where everything is easy. We'll get into that because I made a post about that recently.
I may have saw that one. I don't know. I
Maybe. Okay.
yeah.
But one of the things you mentioned was, you were pretty successful. So I kind of wanted to ask, a couple of key points. Why do you think that was? How do what was the processes, systems that made you successful in the restaurant business?
A lot of it is, you know, uh, in that type of business, a lot of people get in there and they try and save themselves to prosperity.
Mm,
So they cut the staff all the way down. They only have one employee working. They
mm,
don't do any marketing. I kind of took a different approach. I was very aggressive
mm,
about getting involved with the school systems, like
mm,
similar to what Chick-fil-A does. I would do like a charity night where I forget a percentage of the sales went to the school, got involved with the elementary schools. It was a win-win. And then I did canned food drives for the schools,
mm,
just different, all kinds of activities, to get our name out there. I gave a lot of free food to the schools, dropping it off, you know,
mm,
um, a lot of work involved, but I saw so many people that were almost like scared to market their business. There's a trick to that because you don't want to market your business and it be dirty, So if you go out and you're promoting it and they come to your restaurant and it's a dirty atmosphere, it's going to turn them off. So a lot of it was just my mental state, and that's a lot of business, just with real estate as well. Is your mental, how you think about things too. So your mindset. So.
gotcha. And then what was I mean, basically, maybe this is what you're also saying is that was a grind that kind of like, doing all these promotions, doing all this work kind of got you eventually. Grind was too
Yeah.
much, although you were making money.
Yeah, it was profitable. Yeah. Yeah, it eventually got to me. The employees, I had a lot of really good employees, but just overall, managing a staff of 15 to all the way up to 25 at times, depending on what type of season it is, it eventually just wears on you through the years. And it's a lot of younger people, which I kind of enjoyed, but I kind of didn't at the same time. They were always having fun. I had fun with them, but at the same time, I'm like, your life's dependent on them showing up. So anyway,
Gotcha. Yeah, no, I kind of, I don't know. Yeah, having worked in bar scenario, deal,
yeah,
managing. I was a shift manager kind of deal, but yeah,
okay,
it's a it's a it's a dicey situation. Who's going to show up that day?
yeah,
So yeah, no, I had a vision of because I'm a cook. I love cooking and I enjoy the restaurant scene. That's what back because having worked in restaurant, I realized like, oh, this is a grind. This is like a
it
lot.
is. Yeah.
Unless you're like really passionate about it, it's not for everybody. So
Even if you like cooking, it's different because you're not cooking for
it's
yourself. You're cooking for the masses. You have to, we had schedules like how fast does this product need to be made? What are the portions? It was ran like a science.
right.
So it's pretty crazy all the stuff that went into it. So anyway.
Yeah, right. No, that definitely that's true. Like I enjoy cooking, but I'm not going to do it as a profession for sure.
Yeah.
I'll do it for myself, for friends and family. That's about it.
Yeah. Do it on Friday night.
Right, Friday night or weekends or something like that.
Yeah.
All right, let's jump into the real estate. So how did you essentially get into it? Like, well, what I mean, you're not a broker, we'll get into that part too. But when did you jump into it and what category did you jump into it first?
Yeah, well, everybody gets into it through multifamily.
Not, not
It's either single fa- it's
single
either single family or multifamily. But I was doing marketing for different companies, and I said I want to get involved in this. So I just started investing as a passive investor.
family.
And then I started, syndicating,
Mhm.
It's kind of one of those. I said, I'm going to check it out. I'm going to see what it pays, all that. So, probably a decade ago or so, I started, putting a little money here and there, testing the water, seeing how it worked. It always kind of interested me,
Mhm.
you know. And then it turned into, how I like the getting other people involved, changing people's lives. If you can invest at the right time, it's a great industry and a great business to be in. So,
Got you. So tell me, like, with this, current environment, what do you see? What are the I mean, we'll get into the social media part. A lot of too many experts, right? Everybody
yeah,
is highly successful expert, till you dig into it a little bit many times.
yeah,
Some are truly experts, are really good, but some,
yeah,
yeah, you never know. But in the scenario, we'll get into that part later. But like, what do you see current environment? Because I know, being investor myself, doing it for 8 years, I got good ones, bad ones, everything in between.
yeah, I
Yes,
understand.
right? What is the
Yeah.
scenario now? How is it going?
So, I think where you're located, Texas and other states, we have $5 trillion being invested into the United States. So there's going to be a lot of reshoring of manufacturing,
Mhm.
or nearshoring coming to Mexico, which also would help Texas because it has to come into the United States somewhere.
Mhm.
Um, I think, looking at it, I think it looks like the opportunity of a lifetime if you position yourself properly.
Mhm.
Real estate has shifted a lot. I'll say this, policy is changing fast, okay? There were a lot of syndicators that didn't adjust quick enough, during the Biden administration. As inflation started climbing, you saw the same people that were selling apartment complexes in 2022 when they shouldn't have. They're the same people going into oil and other stuff right now when I think they really need to come back and refocus on real estate because I think there's going to be a lot of opportunity right now. I think you hear a lot about interest rates and stuff like that. I think long term, they're eventually going to go down.
Mhm.
You have AI, which is going to put downward pressure on cost.
Mhm.
Energy costs have gone down. You have a president that was set out to lower energy cost.
Mhm.
He said he was going to end the war by put lowering energy cost, but that hasn't happened yet. But we'll see.
Mhm.
So it's a constantly changing environment, but I think it's going to be a good one. We're seeing a lot of investments being committed to the United States.
Mhm.
A lot of money's flowing in, and how do you capitalize? So,
Mhm.
I see the I-35 corridor all the way, from north of Dallas all the way down, you know, Dallas area. I grew up there. It's just it almost seems like it never goes in a recession. If there's a recession, it's not as bad as any everywhere else. I think in certain areas where I live right now in Tennessee, it's going to do really well. But just positioning, a lot of the automakers are coming home. So I see the market as starting a new cycle right now. So
Gotcha.
anyway.
So question on that, right? So let's, a couple of questions. So where do you see, I mean, here's my opinion, right? Where I have a fix and flip going on, which is not selling as fast. Way slower. We're not even fast. Forget fast. Not,
Yeah.
yeah, it's way overdue of selling. So one of the things I am seeing, or at least looking into the future, which is where you and I, you can like hit me back with the other facts, right? It's in the single family area anyway, as especially rental income might be questionable in my mind because of maybe universal basic income comes and people can maybe afford apartments, but not probably houses, like a high-end houses type of, or even mid-range houses. And that's where I feel like you don't know for sure if that's true or not. Or
Yeah, I don't know on that. One thing I was, you know, it's tempting to look at, and I've had a lot of friends in CRE talk about it from the apartment standpoint, is that the immigration.
Mhm.
If you think about deporting 10 million people, what does that do to housing?
Right.
You know, I mean, I think you're fine probably in single family rentals. They always do well, over time, especially in the Dallas area. You know, I mean, I don't think there's any danger there, but you hear about different people saying stuff about immigration, and I don't know. I mean, I just think if you're in it, you look at the stats on Dallas, it's like the gold star winner of, net absorption, so it always, does well. But one of the reasons I've kind of transitioned into industrial is because of the tenants.
Mm.
That's what I'm doing right now. It's, you have a lot of companies coming home, benefiting from that. High credit tenants, think of Amazon, FedEx. Those aren't necessarily my tenants, but those are the type of tenants. Institutional credit is what I'm getting at,
Mm.
versus you get Class C, you talk about things like universal income and different things that could come along. You're talking long term. That's probably not going to happen tomorrow morning,
Yeah,
but
it's not.
someday, but you got to look out long term. It's like, okay, so, that's one reason I've kind of transitioned into industrial is because of the tenant quality. The
Right.
other reason is the bringing back of the manufacturing and stuff like that. I don't think GM has committed, but a lot of the auto manufacturers are talking about bringing manufacturing back home. So,
Mhm.
one place that'll affect is it'll have a positive impact on Tennessee,
Mhm.
you know. So,
Got you. That, yeah, you make an excellent point about the industrial because here's what I've seen. Even in AI, there's a lot of AI-based manufacturing coming that might replace people, but it doesn't replace the complexes.
yeah,
So,
yeah,
that's an excellent point. That's one of the,
yeah,
there is a point I want to also make on that one is you make an excellent point. One of the things I've learned, I still haven't gotten good at it, is understanding the change in landscape and figuring out the future in that sense and focusing on that instead of
yeah,
trying to get stuck in, okay, I'm a, let's say in real estate, I'm a multifamily syndicator. Okay, I'm going to only do multifamily because that's all I know. Or I'm a
yeah.
family. But if the scenario is saying change situation where it's not certain, right now, industrial for the near future anyway, like 4 or 5 years at least,
Yeah.
great, then that makes total sense. So that's an excellent,
Yeah, I put up a post on LinkedIn about net absorption, and construction slowing down, but the leases are, filling up, and that's nationwide. It's going to vary from market to market, but, you know, the model that we're doing it, Class A, shallow bay has very low vacancy.
hmm,
Like 5% is the national average. You get into some of the micro sub markets, you're looking at 3%.
hmm,
The other thing that's really, so we've all done multifamily. So part of the problem is everybody's competing against each other for the same deals. It can even turn into bidding wars depending on, when it was, back in 2021,
I don't know.
so it's like, for really good assets, you don't want to you're not, there's really no such thing as off market because, KKR or Blackstone or those big companies are going to get the call first, and you don't want to really compete with them. So we've kind of gone with a development strategy,
Hmm,
own the land, develop it, buy it in growing areas, get it on the cheap and develop it yourself, no outsourced construction cost, working directly with the city councils,
hmm,
in that Dallas area, the problem about developing in California, you could probably still do it and be profitable is it takes 18 months. You go to the Dallas Fort Worth area dealing with a city council like Arlington or somewhere else around there, just in the general area, it's probably like 6 months. So it cuts down your time just to get it approved. So
Right.
the approval process there. So
Gotcha. Cool.
anyway, the other thing, is adding office to the industrial. It's going to up your rent intake, as far as your net operating income is going to go up per square footage. So, and you can build that out as you go. You don't have to, just go ahead and build out 30% office, as they come in, build one out so you're not just spending through investor capital without good reason. So it's not speculative on the office. So
Gotcha. Now, are you focusing on certain type of industrial, or is it more pretty much like um, whatever the demand is, you figure out the demand, market research, and that's how you do it? Or is that more like a somebody reaches out and then you build the structure and all that stuff?
well, it's kind of areas that, with strong demand, we're going with, just based on, the area and then going with a shallower bay. Part of it is not getting into a million square foot. We're doing like say just a typical place would be 100,000 to 150,000 square feet. Each space you're looking at, 5,000 to 10,000 square feet. You
Mhm.
see what I'm saying? Because if you get into a million square feet or half a million square feet industrial place, if that tenant leaves, that's going to be really hard to fill.
Right.
So, we're going into markets where the demand's there. There's a lack of, you know, supply
Mhm.
and coming in there and, it does really well. So, anyway.
Gotcha. Cool. So now how are people, are you looking, people who invest with you, obviously people can invest with you. Is that more 506C or accredited investors, or you do the B type or 506B, which is friends and family kind of deal? Those for people who don't know what that means, uh, just if you're listening to, so.
Yeah, about 90% of what I've done in the past has been 506C. I don't necessarily have a deal right this second. So, I mean, probably on this next one, I'm going to probably do a 506B.
Gotcha.
So, yeah, the deal, it's kind of one of those where, I'll do a C if I need to go out and get the investors, but I think on, the first one, I already have the investors lined up, so that'll be filled up. So it'll probably be a B on the first one,
Right.
and maybe transition to a C on the third or fifth, or,
Right.
so
So far, how many of the industrial ones? So you're saying the first one is now
yeah,
all
yeah, yeah,
signed
yeah,
up for you.
yeah.
Okay, okay.
Yeah, I've
Then,
partnered with an operator that's done this before. They've been doing real estate multiple cycles, multiple down cycles with good outcomes. Last project, I think their unaudited IRR is like 27% or 24%, So, and that was done in 2020. So, that's through a down cycle with that kind of IRR. So,
gotcha.
so, a lot of it is, this land has been purchased, back in, you know, pre 2020. A
Hmm.
lot of money sat on the sidelines,
Right.
got it at a really good price. And, I feel really good about real estate, and it's time to get after it and develop it. So,
Gotcha. Well, let's get on to the point about we talked about the social media. This one I kind of shared last week because there at least one person who I invested with who barely gave me my money back, and it took me forever to get my principal back after
yeah,
he told me that I was going to get 2.5 times, and then it was 30%, and then barely make my money back. And then he's out there in the LinkedIn posting, all that stuff. And
yeah,
yeah, and I've seen that with other people, a couple of other people I met or talked, not just the investing world, it might be coaching or otherwise, where I feel like, okay, I met you, I talked to you, you don't seem an expert, but you're putting it out there. So in that sense, the real estate world, what do you, I mean, maybe it's in the book too, you might share that.
Yeah, I
What do
mean,
you share there? Like, how do people
some of
how,
that's in my book, does this person really understand the economics behind what's going on, And it goes back to what I said. It's like, you have a president that's pretty much dead set on lowering energy costs, and you have the same syndicators that were still selling real estate in 2022, when interest rates were rising. Now they're out selling oil and other stuff. It's just, and we're transitioning, and I don't know, it's just kind of one of those where the purpose of my book is to get people to think for themselves and start to spot, that you're not gonna, if you go through this book, it's like, there's a part in there for everybody. Like chapter 11 goes through each asset class. If you're investing in, say, storage, you're not going to read every other asset class.
right?
But it breaks down what a syndication is. What are the questions that you need to be asking a sponsor?
Mhm.
You know, it's the starting point of starting to think for yourself and then talking about real estate cycles a
Mhm.
little bit in there, and how do you understand a real estate cycle? And it's one of those where I think change is hard to adapt to sometimes, and I've been really good about changing pretty quickly. It's not easy. People they get stuck in a situation where they're used to operating apartments.
Mm.
So that's what they know. That's their language. And they could, even if they did see it, they just didn't want to get away from
Mm.
operating apartments when they really needed to transition. And then they waited until it was too late to transition. And then, they're just very stubborn, in a way. So, and a lot of people are like that. So, my book is the purpose is to get people to start to think for themselves when they're evaluating a deal, ask the right questions, and then ask if you're ready for it too. A lot of the red flags are internal. Am I ready for this? Do I feel rushed? Do I feel like I know this and I know the reasons, So, a lot of transitioning tours looking at, just warning signs and, not everybody knew exactly what was going to happen back in 2021.
Right.
I mean, I didn't know exactly what was going to happen, but you started to see it, and then you're just like, there was just no there was nothing stopping it with policy making and everything. I said, I don't know how bad this is going to get, but it doesn't look good. So, I made the decision to back off, So, and it was a very good decision,
Mhm.
So all the real estate deals that I did back in those days, the investors walked away with money, none of them went back to the bank. So, for that I'm happy. So if had I stayed at it and done five more deals, those deals probably would have gone back to the bank, just because the economics weren't there. So, it was a very good decision to walk away from it. So anyway, hard
Got,
decision, very hard decision. So,
got
you
you. What would you say is in your, I guess, the mindset or whatever that is that helps you or has helped you look at things when things are changing and recognize that? What was that? Basically, is this not just real estate, maybe the business world, everything you did, or what is it? I mean, maybe some.
I think, well, you're on to something there. It's just a lot of it was the restaurant business. It was a constantly changing landscape. It was, from Chick-fil-A being a competitor. I had to go head to head against Chick-fil-A, which is not easy. You know, um, there's always a new competitor moving in if you're in that area. So it's like you're always like on alert, watching things and watching the market.
Mm.
So I've always just had a thing for I'm just kind of watching and I'm saying, hey, does this make sense? I
Got
mean, and it's just you just start over time, you're just like, you have to watch out or you'll go out of business if you're not watching your competition, you're not watching the economics and everything that's going on, So,
got you.
you
That's a
know,
great point. Um, so the question one more question before we get into the last three questions. So I guess at this point, other than reading your book, who should be reaching out to you, or who can you help?
Oh, I mean, I'm really big on educating investors. I've, transitioned a lot to where, investors need to understand, what's going on. It's a rapidly changing environment. You have crypto, you have AI. How's that going to affect things?
Mhm,
You know, it's changing fast, but I think it's important to stay invested from my standpoint.
mhm,
I don't want to be scared. I have to stay invested,
mhm,
so there's a mindset of where's the right place to go right now. So, you know, I really want investors to start being able to think for themselves, start to question the assumptions. Does this add up? I saw a post the other day, speaking of social media, where they said, I just saw a deal that said 6% rent growth and no expense increases. And I was like, I can't believe that. Did somebody really have that?
mhm,
But the purpose of my book is it goes over stuff like that. Does question the assumptions, don't just believe a cap rate. If they give you an exit cap rate,
mhm,
I don't even like those terms because it just confuses new investors. They don't know what a cap rate is. All it is net operating income divided by the value, but they're just like, what in the hell's a cap rate? But they need to. The purpose of my book is I break all that down in the glossary. In the very back, it explains what a waterfall is, cap rates, all that. The glossary is basically a dictionary,
mhm,
for new investors, and then asking the proper questions. What are the assumptions here? Hey,
mhm,
if you can increase rent 6%, tell me why.
mhm.
I mean, if there's a huge employer moving in, it might be justified. I don't know. And you can get expense down by doing this, but, ask the proper questions because that just, it doesn't seem to add up. So, you
Right.
know.
Gotcha. So yeah, so basically, if you're looking to invest or just learn about investing, so on, first one, obviously, you can you can go and find, yeah, the book he wrote, Carson wrote. I mean, I'll be posting all the links and
Yeah,
book info and everything.
actually, the first 10 people that, email me, I can give them a free copy, you know.
Okay. So
So, you know.
just mention yeah, where you heard this, and then tell Carson, hey, I want the book, and he'll send you that. The other way is obviously you can reach out to Carson to, start, uh, see if you would like to invest with him or talk to him or get more educated, more insights.
Yeah.
Right now, as he said, the first one he's doing, he's already probably got the money, but the future, there might be potential. And he's going to write a book about businesses. So maybe that's something you want to talk to him about. So I'll be posting all the info, and then you can reach out to him however you feel like is productive for you or looks like it's a good match for you. With that being said, Carson, last three questions. So what's the one book other than your book that you read that you recommend everybody to read?
Oh gosh. That recent one by, I think it's Housel wrote it. The
Okay.
emotional, I don't even know the title. Emotional Side of Money is what it's
Oh,
about.
yeah, 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 I forgot Morgan. Yeah, the
And it's similar to my book. Nobody reads the entire thing. I've read about half of it.
I
So,
should read the whole. I'm the weird guy who reads every book entirely.
yeah, yeah. So, there's several good ones out there, that I've read lately, but I felt like that one was good.
Mhm.
Just how do you think about money? It's are you running around the grocery store? I started off going to Dave Ramsey, and I'm sitting there calculating and I catch myself doing it all the time. I'm like, do you really think I'm going to change my life by looking at costs between Costco and Kroger? And you know what I'm saying? I'm just like, it gets a little ridiculous. So it's kind of like, what's the emotional side of money and how do you think about it? It's just, it's, it's different. So to me, and I talk about it a little bit in my book, is, smart money doesn't mean you skip date night or skip a vacation.
Right.
You know,
Right. Yeah.
so it's one of those where I came from the beans and rice Dave Ramsey stuff when I was younger, and I've kind of graduated. So anyway, you know.
That's an excellent point. Yeah, I mean, yeah, you don't want to go max out your credit card and do all this stupid stuff. At the same time, don't go to the extreme and like penny pinching everything. I've seen those people. I'm like, you're like limiting yourself completely, not thinking bigger,
You,
right? So,
one thing is, this ties in. Another book is Rich Dad Poor Dad. I have a lot in common with him, and I didn't know it until I read his book. And this is after corporate America because I hated corporate America so much. When I left, I said the same things in my head. I said, I'm never coming back to this place. And I talk about that in my book, but it's the exact same thing he said. And I was just done with it. All the politics and all that, I was just done. But that's another book, just I don't keep up with Robert anymore lately, but back then I thought it was a really good read. The mindset of being an entrepreneur and starting and learning to think for yourself is a lot of it. So, he talks a lot about the mindset is you got to get smarter, and that's a lot of my book is getting people to start thinking and acting and thinking for themselves. So, anyway.
awesome. Well, the second question is, what inspires you to get up and do what you do every day?
Helping other people, grow together, teach and learn and, get involved in profitable businesses, that everybody can make money on. So, you know,
Cool. Awesome. And the last one, what's the one tip? This time you have to share only one tip that has helped you recent, past, whatever, personal or professional, that you can share for other people to follow.
oh gosh, that's not supposed to be a hard one. I think read a lot, read from successful people. I mean, you talk about Rich Dad, Poor Dad, I've analyzed other, entrepreneurs that have done it, from the ground up, because, once I made the decision not to go back to corporate America, it's like, okay, I started with a marketing business. I got involved in other businesses, you know, learning from other people that have done it, because your first couple years out there, it's actually pretty scary. You're sitting there and there's no paycheck coming in, and I'm sitting there going like, what in the world do I do? I don't have a job. I have a website, and it's like, I better make something. And it's almost like puts you in when you first start, it kind of, your mind, it's like almost like a sense of desperation. And then about 6 to 12 months in, you start to realize like everything's going to be okay. It's going to be all right. We're going to get through this. And then, here I am 20 years later. So I think a lot of it is just learning from other people and, and stay after it. Don't quit. Don't give up because there's been tough times. So anyway.
Gotcha. Well, he did give two tips there, but
Yeah,
that's
yeah,
great tips.
yeah.
Right,
It's
but that
better than one. Two for one, man.
for one, there you go.
I got the discount.
There you go. Discounted. All right. Thanks for taking the time, Carson. And like I said, I'll be posting Carson's info, book, website, whatever he'll share with me.
Yeah.
So reach out to him. If like what we talked about, something rhymes with you, or get his book first, maybe if you're new to real estate investing, especially because there are a lot of key points he was making there to read and understand, and then maybe wait for his business book to maybe learn about business investing whenever
Yeah.
that's going to come out. Uh,
Yeah.
Probably post that. So anyway, thanks again, Carson.
Yeah, absolutely. Thank you.